just type in value. So we know that what he shared is valuable to you. Okay, so if you have any questions, feel free to ping in the chat group also. We will be answering them more after the session I'm going through. All right, so just now Zhi Pei has actually used my case study already. Okay, so I prepared a case study on Apple today to perform the process that I'm going through for fundamental analysis. Okay, so what I will be going through now, I will be starting all the way from how to find this company, how do I determine the economic modes, how do I use the seven key ratios and 4 extra points that Zhi Pei was sharing to analyze this Apple company. All right, so let's begin. So Apple, first you need to know what is this company doing. Okay, never invest in something you don't actually know what they are doing. All right, that's very dangerous. Okay, so what is this company? Apple is a American MNC company. They are doing technologies. Okay, so their headquarters is in California, just for your information. So what they do, right? They design, they develop, they sell electronics, software, and online services. Okay, so it's a very, very tech-based company. And Apple, many of us will know, is actually considered one of the big tech technology companies, and it's actually standing alongside with all other big techs, Amazon, Google, Microsoft, Facebook. Okay, there's an acronym for this actually. So for these big 5 tech companies, right, people usually call it FAAMG. Okay, Facebook, Apple, Amazon, Microsoft, Google. Okay, just for your information. All right, after you know what is this company already, right, like you search, you found this company Apple, you know this company, you are using this Apple, iPhone or MacBook, whatever. So before you invest, right, dive in deeper. So let's see what is their business. Okay, this is the second question you should be asking yourself. So what does Apple do? Like I mentioned, Apple sell consumer hardware products, iPhone, iPad, MacBook, iPod is no longer here, Apple Watch, Apple TV, AirPods, and HomePods. All right, so they have quite a wide range of hardware products for you to use. All right, nowadays people use smartphone, nowadays people use laptop, people need to connect to their what do you call that, wireless earphone, and nowadays HomePod for smart home design is more and more common. All right, so iPhone actually covers all of these together. And with all these hardware products, they actually have their own set of software products. So it's a very integrated business. For MacBook, we have Mac OS, iPhone iOS, Watch, you have Watch OS, TV OS, iTunes, Safari, and the list just goes on. All right, and apart from these two, which are commonly known, one of their main business money milking portion is actually on the online and other services. All right, so they have iTunes, they have iOS, they have Apple Store, they have Apple Music. Okay, so they even have Apple Pay, Apple Cash also. All right, so their business is actually doing very good. Yeah, this is just another view for you to visualize if you find that, oh, the previous slide is too much. Okay, hardware, we have all these software applications, and they offer services also. All right, I think all of you here will know, right? This is the newest product that Apple is launching, okay? iPhone 12, and it's the first Apple product that is going 5G. All right, so this is actually a very big news for Apple and very excited about it. Okay, Apple is one of my strongest conviction stock also. So that's why I'm pitching this company today. Okay, so let's dive into economic mode. So there are 4 key points that mentioned by Zhi Pei just now, right? Can you all still remember what are the 4? If you remember, type in the chat room, okay? So it can serve as a reminder or revision for you also. All right, what are the 4? Let me take a look at the chat group, see if you are listening or not, or you are just, okay, network effect is 1. All right, what are the other 3? Okay, no one already. Okay, never mind. Let's go through one by one. So the first one in the economic mode is network effect. Okay, so network effect in a layman term, right? It means how many people are actually using this product provided by this company. Okay, so the larger population you are using it, the larger network effect you have. Okay, that's essentially what it means. All right, so for Apple, As we can see here, as of Q1 this year, Apple is reporting 1.5 billion of active devices. So when we look at current world population, right, we only have 7.8 billion population up until today. Okay, this is actually updated. So we are actually having about 19 to 20% of global populations are Apple users. So out of every 5%, right, out of every 5 people, one of it is actually an Apple user, all right? It can be an iPhone user, it can be an iPad user, it can be a MacBook user, okay? I myself, I'm an Apple user. I used to use iPhone, I used to MacBook, okay? Right now, I changed my iPhone already, but my MacBook, I'm still using it, okay? Yeah, so it's very strong. Every 5 people you talk to, one of it are using Apple. So this is something Apple has done a very good job on network effect. Okay, this is the first plus point for us in economic mode. Okay, let's dive in deeper to the second point. Oh, sorry, before second point, I did too much research on network effect already. Okay, so this is another details on iPhone. So how many people in the US actually have iPhone? Okay, so this is reported September. There are more than 100 million iPhone users in US. Okay, so smartphone user in US, there is only around 250 million. So similar data, every 5 American you talk to, one of them are iPhone users. This is very strong. Okay, and Apple iOS OS have 50% of share of the mobile operating system. Okay, this is to competition to Android and maybe other OS from all random smartphones. Apple itself take up half of the market share already. Okay, this is another very strong plus point from network effect. And this is just an illustration on the market share for the global smartphone market selling point. Okay, so we are comparing a few different brands here, brands that we are familiar with. Huawei, the hash means that Huawei is tagged together with Honor, Samsung, Apple, Xiaomi, Oppo, Vivo, Lenovo together with one of the brand, I can't remember already. Okay, but as you can see here, Apple, we are taking quite a big amount of market share. Okay, this market share is by amount of phones that you sell. It doesn't take into account the value, the total revenue we are generating from the smartphone. Okay, as you all know, smartphone, Apple is selling much more expensive than many brands. So with a 14 to 15% here, Apple is actually generating quite a good amount of revenue already. All right. Another thing I want you all to take note when you are analyzing this kind of graph. Okay, so this is a quarterly graph. As you can see, Q1, Q2, Q3, Q4, and the list goes on for the 3 years, right? So something you can observe here, I want you all to dive into Q4 of each year. Okay, 2018 Q4, 2019 Q4, and Q4 for this year is not out yet. Okay, so for the past 2 years, right, you can see that Apple sales always surge on Q4. All right, 14, 11, 12, then 17, 12, 10, 12, then 18. Okay, 14, 14, something. Maybe this year will spike to 20. We don't know yet. But this is what the historical data that have backed us up. Okay, Q4 Apple has always been doing the best. And when you look back year on year, right, let's take a look at 2020 Q1. Okay, we are having 40% of sales. What about last year? Last year Q1, we are only having 12%. Okay, so it can show that even for Q1 and Q2, Apple is doing better. And Q1, Q2, Q3 are not the best sales for Apple. So does it give you a confidence that Apple will do better in this Q4? I don't know. You answer that yourself. All right. Another data, this is on MacBook. Just now the market cap is on iPhone. So right now this is on MacBook. Apple, MacBook, not so outstanding compared to HP, Lenovo, Dell. I hate Dell very much. Acer, others. Okay. But as you can see, Apple is growing their market share already for Q2 2020. And MacBook, as we can see, MacBook is selling like crazy, the price, and they are still increasing their market share. I don't know how people are getting so rich, but I must say Apple MacBook is very good. I'm using for 5 years, I'm not throwing it. Okay, so that's for network effect. All right, the second, let's look into intangible assets. So intangible assets, Apple, when we talk about Apple, right? Is there anyone nowadays to know what is Apple? Everyone knows the branding of Apple, right? So Apple has actually instilled a very strong branding among the consumer market already. Okay, apart from that, right, Apple actually has a very huge number of patents to bring a very good competitive advantage for Apple. This is actually something I don't know until recently I did my homework on Apple. And as you can see on the right here, right, this is actually a ranking due on Q2 this year. For Silicon Valley itself, Apple is actually leading the patents assigned from 2019 to 2020 within a year. Apple already getting close to 2K of patents. Wow, this one I don't know how they do it, but for the products itself, right, I took a very quick scan through. Let's say Apple Watch, for example, the interface on their Apple Watch, how they are doing all the designs, they actually have multiple patents on how they design the watch already. So let's say, just for example, let's say Huawei copy Apple and they come out with a Huawei watch or something. So Huawei cannot actually use the same design and same programming that Apple is using, or else they will be infringing the IP that Apple have. Okay, so this actually acts as a very good defensive and both offensive in terms of the market to give Apple's a very good competitive advantage compared to their competitors. Okay, so for this, I will give a plus point for Apple's intangible asset. Okay, that's point 2 in economic modes. Let's look at point 3. Okay, cost advantage. This one, I must say, Apple doesn't have cost advantage compared to all other competitors. Okay, let's be frank, Apple is very expensive. Apple actually don't sell cheap, okay? Apple don't compare themselves to other brands like Samsung, Lenovo, Huawei, all the other competitors out there. What they do, they actually sell Apple product at a premium price. Okay, so I searched online. It's actually one of the strategy by Apple. You can judge from yourself whether it's a good or bad thing for Apple, but they claim to be one of their advantage for bringing a premium price seller. But what I want to take your attention also is on the right side. So there's a study done on the post-install activity engagement rates comparing Apple and Android users. So what does this mean, right? In layman term, if you buy Apple, you buy Android, after you get the phone, right? How many percentage of the users are actually buying more stuff or getting more engagement in payment and paying more stuff to Apple or the Android phone provider, let's say. And you can see that Apple itself register comparable to Android. Reserve, Apple use more. Apple purchase is also more. In-app purchase is also more. And Apple users tend to subscribe more than Android. Yeah, so this one actually gives us another plus point. Obviously, it's not on cost advantage side, but it's something to tell you, if someone buy Apple, they tend to be more comfortable to spend more on Apple platform. Okay, so switching costs. This one, Zhi Pei just now covered already. Apple has a very stickiness to the consumers. If you enter the Apple ecosystem and you want to jump out of the ecosystem, right? It's very painful, I tell you. I encountered this myself last year. Okay, so last year, right? For the past few years, I've been using iPhone. Until last year, my iPhone really cannot make it ready. Then I changed to this Huawei. Okay, by the time I changed to this Huawei, I regret so much. I feel like I'm handicapped already. I lost one of my arms to do my job. Okay, because I'm using MacBook. The convenience that Apple provide you with their iCloud, with all their service, with all the integrated system, is so convenient and so user-friendly. It sticks to you wherever you go. So as an Apple user, once you enter the ecosystem, you tend to buy more and more and tend to subscribe more to Apple products. Yeah, that is something I say that Apple does a very, very good job in terms of switching costs. So it's very costly for you to switch from Apple to other products. So that's another plus point for Apple economic modes. All right. So before I move on, what are the 4 economic modes again? Can you type in the chat room now? After a fresh refresher, I want to see how much of you actually know. Okay. Yeah, Mandy sending me a private message. Yeah, you can type to everyone so everyone can see. Yeah. So 4 of it, type in the chat room. Let me have a sip of water also. Oh yeah, by the way, am I going too fast, guys? Because I feel like I tend to speak faster this session because last session I speak too slow. If you all are clear, type in good so I can continue after economic modes. All right, thanks Zhi Pei for reminding. Good. Okay. All right, I will move on then. Okay, so this is the Apple share price, just showing you all. Okay, right now it's selling at around 120 USD. Okay, PE ratio showed by Zhi Pei just now. So for your information, right, if you want to take a look at this thing, you can actually just Google Apple stock price. And the first thing you see from your Google browser, right, it will be something like this. This is actually provided by Yahoo Finance. So whenever you key in a stock ticker or you just tap Apple stock price, and this will appear on your first web browser. So you can have a clear glance of the basic stuff you need to know. Okay, so after economic modes, let's move on to the important part, company financials. So this will be a refresher like as what Zhi Pei has covered, because I am doing actually the same company as Zhi Pei. Okay, so 7 key points, 4 extra points. Let me refresh quickly on the 7 key points. Revenue and net income. So just to let you know, is the company getting more revenue year over year? And with all the revenue they are getting, after minus off all the costs, right? Are their net income actually increasing? Yeah, net margin will be like, the margin between how much they are selling and how much is the cost. Earning per share. For each share you are holding, what are the earnings they can generate to you? Return on equity. For each equity, how much percentage return are you expecting from it? Free cash flow is the cash flow. It will tell you the situation on how they manage their cash flow. Interest coverage, how long can the company pay the interest in terms of year with the cash they have? And dividend payout is like giving a part of their earnings back to the shareholder. Okay, 4 extra points here: debt to equity, price to earning, price to book, price to earning per growth. Okay, a few criteria covered by Zhi Pei also. We want a constantly increasing in terms of revenue and net income. Net margin preferably above 12, increasing earning per share over 50% for ROE. Free cash flow must always be positive. This one very important. Interest coverage at least can cover 4 years of debt. So let's say COVID hit, right? They can actually use 4 years to buffer. They won't die so easily. Yeah, dividend must also be consistently increasing if they are paying dividend. Okay, just a recap. Revenue, you can see that it's increasing. Net income is also increasing. Earnings per share, increasing year over year, a very good sign. Dividend is also increasing. Oh yeah, something I want to highlight about dividend also, right? When you look at dividend, you can also pay attention about the payout ratio, which is just below the dividend here. So make sure that the company, if they are paying dividend, right, the payout ratio shouldn't be super high. Okay, what does it mean by super high? So if the company is paying a payout ratio, let's say 80 or 90% or even 100%, then it's something very crazy already. It means like for every $100 they earn, right, they are paying back their shareholders more than 100%. More than 100%. If their payout ratio is more than 100, then it doesn't make sense. So it means that whatever they are earning, they don't keep a cash for themselves to grow or to operate. They are just paying more than what they should be paying to the shareholder. Okay, so free cash flow is also very important. Yeah, cash is king, especially during this COVID period. So other key points will be ROE. As you can see, Apple ROE is very quite high. It's already almost 75%. Then interest coverage, even though as we can see, it's dropping, right? But it's a lot more higher than 4. So what this number here means that in the case where Apple need to pay their debt, right, with the cash they have, they actually can afford to pay just the interest for 24 years. So that means the company won't face any financial crisis in the upcoming this number of years. Okay, some extra points. Price per earning, price per book. As Zhi Pei mentioned, right now, if you look at price per earning, price per good itself, right, you think Apple is very expensive one. Current is 30 something, average 5 years is only 18. Price per book also, the past 5 years is only 9, but right now it's 30. Okay. So yeah, with that, I end my first case study. So right now, here's the interesting part, guys. Within this session, right, what we have pitched, Apple, we shared a little bit on Wirecard, we shared something on PayPal, but eventually, when you are doing your FA, right, maybe some of you after this session, you still feel very blurred. You still don't know how to proceed. And there are actually companies you have been eyeing on, you have been wanting to invest, but you don't know how to go through the process. So right now, here, case study number 2, right? Both me and Zhi Pei, we are offering a chance. We are opening to the floor to let you all suggest a company to us. So we'll do the analysis straight here on live for you all. Okay, so you all can use this as an example also on how we go through the FA process. All right, so if you have any company in mind, yeah, just hit it in the chat room. So with the most popular one, me and Zhi Pei will choose the most popular one and hopefully something we understand to analyze on. Okay, is there anyone are there anyone suggesting? Yep, any stocks, any company you are interested of, but you don't know how good is the fundamentals. We are actually here to help you. Wow. Không type in Neo à, Zhi Pei, you familiar with Neo or not?
I know it's the electric car company.
Okay, SK type in Lonza. Lonza is a pharma company. Oh, PLTR, definitely. Okay, PLTR is in my watch list, but oh shit, I'm disappearing. Okay, PLTR is on my watch list. Okay, but okay, this is a very good example. So PLTR is an IPO. For those who don't know what's an IPO, right? It stands for initial public offering. So in a layman term, it means that the company is growing. Then one day they decide that, oh, we want to go public. We want to go onto the market and collect monies from the shareholders to grow our business. Okay. So for IPO, right? IPO stock like PLTR, they don't really report a lot of data because they have just been in the market for, let's say, they just IPO this year, right? Is it, Zhi Pei?
Yeah.
Yeah. So right. With this, right, usually they only need to submit the past 2 to 3 years of data to the market. Yeah. So it's not very, how to say, not very good.
Yeah, like there are not enough data for you to look at and for you to judge whether the company is doing good or not.
Yeah. So this is actually one of the limitation on fundamental analysis. Okay, fundamental analysis looking at the past track record of the company financials. But if the company financials don't have enough data, you can't really use FA to give you a very solid conclusion, I would say. Yeah, but PLTR definitely something I will be looking at. Just FA wise, after you look at the FA, you won't invest one because usually company who go for IPO, they are still making losses. Yep. Okay, any more suggestion? Neo Lonza. PLTR. Okay, definitely if you need PLTR later, update you offline. Neo Lonza. Zhi Pei, preference?
I think for me it's Neo.
Okay, let's go for Neo.
Okay, so I will share my screen. I need the host to be the host.
Oh. Yeah. Okay. Yeah, done.
Okay. So, okay. So, yeah. So basically what we'll go through is the economic modes and also the company's financials again so this one will be the new. So let's type in new. So we
Let's pay.
can.
Oh, okay, can already.
Okay.
Yep.
Okay. So actually, Neo, as you can see, it started IPO also not long ago, about 2 years ago, 2018. And there's not much data. So as you can see in the key ratios from Morningstar, the revenue, it is definitely increasing from 2018 until now. It's almost double, and soon to be growing much more. Then for the net income, it's still making a loss actually, because it's growing. It's still a small company, and it's growing very fast. So it needs to burn a lot of cash to maintain its operations and to grow to much more places. And the earnings per share is still negative, and free cash flow is negative, and many other things like net margin, ROE, it's still negative. And so for this kind of companies, they are quite new, small, and it's not profitable yet. So many of the points are not within what we look at. So company financials, so all these points, they do not match what we are looking at. So it's not a very good company to look at right now to invest in if you are looking at long term. Yeah.
Yeah, so one thing about FA, right? Remember I was stressing on value mindset. So actually FA works very well on value investing. Yeah, so for Neo, like such as Neo and Palantir, a new company, right? If you are investing, you're actually a more growth investor or more an aggressive investor, because you don't really have a proven track record on how well is the company is doing. But then you can see, like, you can visualize how good is the company doing in the future without any substantial data. So you are more of a growth investor, I would say. Yeah, so FA actually works very well when you are investing in company that have a certain years of proven track record. Can I say that, Zhi Pei?
Yeah, correct.
Okay, so for Neo, my personal take, right? Okay, I'm not doing FA, but Neo, my personal take. Do you know what the company is doing? Who asked this question again? Ong Leket. Yeah, Leket. So Neo, do you know what the company is doing? So Neo, right, essentially is doing EV, electronic vehicles. So electronic vehicles, from my understanding, I may be wrong. Right now, electronic vehicles, one of the most pioneer we know, Tesla Inc., Tesla Motors, okay, which is a US based. Neo, if I'm not wrong, is from a Chinese based company, and is backed by the Chinese government, if I'm not wrong. Okay, so my personal view is very simple. Is this when you are investing in a sector, if you can invest in the best, right? I wouldn't personally go for the second one. Okay, there's a question asked by one of the instructor that both me and Zhi Pei went through. So he asked this question: what is the next Tesla? Look at who is the next Tesla? Is it Neo? Okay, so my answer is very simple. The next Tesla will still be Tesla. The next Google will still be Google. Yeah, so that's my point of view. If you invest in something, I would want to look at the Taiko. I would look at the big brother of that sector. Yeah, even though I know that this year, if you compare Neo and Tesla, right, Neo is doing super good. If I'm not wrong, it's 1,000% return, something like that. Yeah, but my personal take, I will invest in something that has more substantial background. So Tesla, I'm a believer of Tesla. I didn't invest in Tesla for the past few years because after the IPO, they haven't been making money. Okay, they have still been suffering for losses for many years until, if I'm not wrong, last year, they finally turned profitable. So that's something that back me up from a fundamental analysis point of view. Oh, you are not making money, but you are doing better every day. And now you make money already. Okay, when I see this from red to green, right, that gives me an indication that, okay, Tesla business is doing good, so I can invest. Yeah, so personally, I actually entered Tesla last year and I added some position this year. Yeah, so that's for my take lah. Yeah, but obviously different people will have different view. NIO, yesterday, if I'm not wrong, is dropping 7%. So whatever goes up will come down lah. If you see the curve, parabolic up, confirm must correction down one, I tell you. Okay, so if you want to invest in NIO, I would say fundamental analysis can't really help you much, but more on technical analysis to look at what are the supports that you can play.
I think for NIO, I think it's announcing its earnings on the 17th. So it's basically 3 more days. Then from there, we can see like, from the earnings, we can see that whether they are making money or not, and also what are their management plans to grow the company and things like that for their future. So I think I saw the previous quarter for NIO, it's actually profitable. It's positive earnings. So we can still keep in view on this. Yeah.
Okay. Yeah. Okay. Thanks, Zhi Pei. I think that's a very good point for NIO. So earnings, for those who are not familiar, right? For each company, every quarter they needs to file their earning report for the past quarter. Okay. So for each quarter, there will be earning seasons, meaning company will be filing up, reporting how well they are doing in terms of their EPS and their revenue. So from there, you can actually tell two very key important data, which are the earning per share and the revenue that the company is generating. From there, you can have some ideas whether the company is doing good or not. Yeah. So I didn't follow up on NIO. Maybe that is why the NIO has been charging up, is it? Since that it turns profitable last quarter. Okay. I hope I answer your question on. Zhi Pei, should we do Lonza quickly? Give us a minute.
Okay, so Lonza Group. Okay, so I've opened up a Morningstar, and these are the key ratios right here. So I will go through the financials first. So the first thing we look at is revenue. It is increasing, and the net income as well is also increasing. So for this, we can actually give some points here. So this, it meets our criteria, so we can add it as 1 point. Okay. So the next thing we look at is the net margin. So net margin at the bottom, it's 10%, 6%, 14, and 10. So it's still less than what we are looking for. We are looking 4 is 12%, but it's quite close to 12%. Some years it's more than that, but most of the years are less. So we can. So to be stringent, it did not meet our requirement, so it's 0 point. Or you can maybe give a half a point because it's quite close. So the third point is earnings per share. Earnings per share is here. So it's definitely increasing throughout the years, and now it's actually 1.1. So this will be a plus point. So here is a 1 point. The fourth point is ROE. So ROE, let's see. ROE is 12%, 13%, 10%. So it actually did not meet our criteria of over 15%, but it's also quite a good number. So we can put in as 0.5 point. And then free cash flow, interest coverage, and dividend. So free cash flow, it is great. It's in a positive region. And dividends is up here. It is also increasing throughout the years. As well as interest coverage is quite healthy. It's more than 4 over the years, except for these few years, but the recent years are all very good. So what I will put is 1 point for each. So 1 point, 1 point, and 1 point. So in total, there are 6 points out of 7. So it's pretty good. The financials for this Lonza is pretty good. So the next part is the debt and equity. So let's look at the valuation. Oh yeah, debt and equity is over here actually. Financial health, debt and equity. So it's pretty healthy. It's at the 0.5 range for the past few years. So it's a plus point. And then the other key points are the price to earning ratio, price to book ratio, and PEG ratio. So currently it's quite high. It's more than 15, but it's less than the, it's 53. So it's more than the 5-year ratio, 5-year average. So this is not a good sign for now. And same for the price to book, as well as PEG ratio. It's there's no number over here, so it's we don't know for this year how it's doing. So for this extra key points to look at, we only have one good points, which is the debt to equity ratio. So the other are 0, 0, 0. So overall, we are focusing mainly on these 7 key points instead. So because for this extra points, it's just an extra indication of whether now is it the good time to invest now. So this is not to say very important, but it's something to look at. And for the last part, the economic mode. So Lonza, Lonza, what are they selling? So you can basically go to their website and you can have a look at the whole website. What are they doing? They are a pharmaceutical company and biotech, nutrition. So because I'm not familiar with Lonza, so I'm not sure whether Joe is familiar with that. Maybe you can have a talk about the economic mode.
Okay, Lonza. Wait, I'm actually taking a look at the website also. Okay, so Lonza is a company I know, a biotech company. But to be honest, I never really dive into what drug they are doing. Okay, but right now I'm at one of their page on intellectual property. Okay, so they actually filed a few IPs already on process for some enzymatic production for beta lactons. But this one doesn't seem to be very related to what the company drugs is selling about. Okay, so network effect, I can't really give a guide on network effect, but I can tell you if you are looking into pharma companies, right? If you are looking into network effect, you can compare what is the best selling drug from Lonza. Compared, let's say if Lonza have a drug on, let's say heart attack disease, then are the competitors from Lonza making similar drug, which are better? And what is the market cap for that drug compared to drug B from the competitors? In terms of intangible assets, they have a few IPs. I must give them credits on that. They have trademark portfolio also, and the specialty ingredient, which is their secret recipes for different drugs. Yeah, they have filed that also. But again, this is Lonza itself. So you still need to compare Lonza with other company. For example, my favorite pharma company will be Merck, J&J, Pfizer. Okay, see whether are they actually doing similar drugs. Okay, cost advantage. I'm not a user of Lonza drug. So if someone is using Lonza drug, can try to take a look how much does it cost to buy a Lonza drug. So for example, there's a pharma company called MVO, right? MVO actually sell diabetic drug, if I'm not wrong. Zhi Pei, am I correct? MVO.
Yeah, they are selling insulin.
Yep. So
it's for
Zhi Pei,
diabetic people.
So MVO is selling insulin to diabetics people, and they are like one of the only few, if not the only one, that is selling insulin. So this is a very good network effect lah, because people who are having diabetics takes up quite a number of proportion in the world population. So network effect, I will give credit to them. Intangible asset, I can't really say. I didn't do research on their IP. Cost advantage, they have the advantage because they are the only one or maybe the only few selling this, what do you call the insulin for the diabetic treatment. So even if they increase the cost, right, you still need to buy. If not, you still need your insulin jab lah, if you are diabetic. Then switching costs can be quite painful because usually drug, if your doctor prescribe you this drug or this treatment, right, usually you will stick to it. So Lonza, personally, I'm not so familiar on what the drug they are doing. So I can't really comment on the switching costs and network effect. But something I found interesting about Lonza just now, which was mentioned by my friend also. So Lonza Group, right, actually signed a 10 years deal with Moderna to manufacture ingredients for the company COVID-19 vaccine candidate. Okay, so this can be a good thing, can be a bad thing. Okay, why do I say that? 10 years deal with Moderna. So they are actually betting on the fact that Moderna can come up with this COVID drug. and they can file, let's say, their IP, their patent. So Moderna will be the market leader for COVID. Okay, so with that, Lonza will be supporting them to manufacture the ingredient, because I'm guessing that Moderna might not have the big capacity that Lonza have to manufacture the drug. Okay, so it's like a piggy bank thing to Moderna. So with this is the news that Zhi Pei is mentioning. With all the financial we are doing, we still need to take note, is there any news like this that might affect the future movement in the company? So let's say right now they are signing a 10-year deal with Moderna. If Moderna COVID drugs come out to show a very good efficacy, which I believe is next week, they are announcing efficacy on their COVID drug. So if that efficacy is good, Lonza price will be tagged to Moderna. So if Moderna do well in their COVID, Lonza will do well in their COVID sector also. So if this happens, Lonza will have a good economic mode in terms of network effect, switching costs, and cost advantage. Yeah, that's what I can comment on. Yeah, but okay, Zhi Pei is sharing something.
Actually, from the chat group, I think someone, my brother, he shared a link. The link is showing Lonza competitors. So from this, I think we can also go deep dive into what are they doing and what are their competitors, and look into how they compete with the others, and see whether they are doing good or not. So this is one thing we can look at as well.
Okay, seems like it's doing good. Okay, wow, that's a long session. All right, I hope that answers a bit on Lonza SK. If you need more info, probably I can PM you later. Let me take a look at the slides. Sorry, Zhi Pei, can you share your Google slides? I can't share it on my side already.
Okay. Okay.
Okay, can you just go down to after case study 2?
Oh, so yeah. So this is when you make decisions on whether the company is it fundamentally good or not. And if yes, if it is a good company, then you can. The next thing to look at is the technical analysis, and this will cover in future sessions if you are interested to listen. Yeah.
Okay, thanks, Zhi Pei. So moving on, right? The next thing I want to go through very quickly before we wrap up is that many people who are listening in this call are like me, right? We start off as small capital. So small capital investors, how can we actually start? Okay, so here's one of the strategy I want to share with you, which is called dollar cost averaging. I would say it's a no-brainer strategy. Once you find your conviction company with just the fundamental analysis we shared throughout for the past hour. Okay, so here's a comparison between investing a small sum regularly and investing a big sum at a one go. So most of us are on the left because we start with small sum, but what we can do is that we can invest regularly instead of one big goal, provided that you know that you are investing in a strong fundamental company. Okay, can you go to next slide? Yep, so this is the DCM I'm talking about. So for the blue one on the top right, they are investing a lump sum at $10. But after all the roller coaster, after January to August, right, they are not making any return at all because the price just break even back to $10. Okay, that's a danger of lump sum investment. If you don't do well your homework on FATA news and knowing the macroeconomics. Yeah, but a good thing about small cap investors, we don't have a lump sum, so we can invest regularly every month. So what that means that I can put in 1,000 here, 1,000 the next month, and the following month I also put 1,000, 1,000, 1,000. So even if the price just break even after 8 months, right, you actually also have a return of 4%. Okay, it's not very awesome, but at least you are generating some return compared to no return at all. Okay, so this is dollar cost averaging. You neglect all the noise you have in the market. So you just do your fundamental analysis, gao. You are very convict with your source. Like I'm convict to Apple. No matter what happen, I will still invest in Apple regularly. So in the long run, I will still make money. Okay, this is a long run share win strategy if your company is a strong fundamental company. Okay, so here's a very quick story of the three sisters, Tiffany, Brittany, Sarah. So each of them, they save up to invest. Let's see their story. Next. Yeah, so Tiffany and Brittany know the market could be volatile. Okay, this is a chart of the past record of the market. So next. Okay, Tiffany, she's a lump sum investor. She invests everything and she has a worst timing. Let's say she invests before COVID. She invests during before March. Okay, then the market crash. Eventually, because she has the ball, she hold very long until the market come back, recover, break even. So her profit is 663K. Okay, next. So Brittany also timed the market, but Brittany better. Maybe she know a bit of TA. So after the market come down, she invests during the dip. Then because of her perfect timing, right, she earned 956. Okay, next. Yeah, so slow and steady, Sarah. Me like me and you we don't have so much money at the first, but we can invest slowly, every month or regularly. And if you don't have time to invest in the market, to look at the market, you can just put a constant monthly gyro or something like that to invest regularly. Then right now, Sarah is actually earning 1.38 million, which is better than the two other sisters. Okay, so this actually tells us a very good lesson. Invest early and often is better. And time inside the market is better than us timing the market. Because timing, if you time wrong, you'll be like Tiffany, very terrible. If you know TA, you time the market, you can be Brittany, you can have a good return when you buy low, sell high, but you also miss the opportunity cost of when the market is going up and you didn't have your money inside. Yeah. So Sarah, if you invest steadily, in the long run, it's a sure win strategy as long as you are investing in the right company. Okay. So moving on. Yeah. So just a quick summary on some useful websites that we mentioned. Yahoo Finance, investing.com, Morningstar, which is the one we used just now, finvix.com. I use this very much, very often. So on the bottom right here, you can see, it can show you a map on that day of S&P 500 or other indexes, whether the market that day, is it a bloodbath red or is it green, which is very boring, you can't do very much. Yeah. So hypercharts.com, we didn't get time to cover this part, but if you are not a very number person, right, you still want to do FA very quickly, you can actually go to hypercharts.com. Oh, sorry, I think I'm missing an R here. So it's hyper, CARTS.com. Okay. So when you enter there, you can actually click on the company you want. It will show you very nice graph link to what we covered from Morningstars. Okay, next page. Okay, so if you want to invest manually, right, here are the 3 trading platforms I personally am using. Okay, TD Ameritrade, which focus only on US market, American market. Interactive Brokers, recently I'm switching to Interactive Brokers slowly. So you can do fractional shares there also. You can buy also US stocks or HK stocks, but HK stocks, there are some limitations. Okay, eToro is something I always promote for beginners because the user interface is so much more friendly compared to TD and IB. Okay, so you know what is happening behind the curtain when you are investing slowly, but eventually eToro, you are doing mostly CFD. If not, you are buying some underlying fractional stocks with eToro. Okay, so IB and TD to me provides me more, is better after you learn your basics from eToro, then you can convert from eToro to there. Okay, that's my personal suggestion. Next. Okay, after all this, what's the next step you can do? So let Zhi Pei show you first. If you haven't joined the Telegram group, go join the Telegram group at Investment Diary. Okay, so what we'll be sharing, we will usually share market news, earnings, and if we spot some opportunities from the market graph from the company that we are familiar with, right, we'll also share with you. So if you are feeling comfortable, you can actually manually enter certain position from there. Okay, and with this group, we want to build a community that has strong whys on why we are investing, and I want to have a community that we can learn and grow together. So eventually, after all these lessons, right, it has been me and Zhi Pei sharing with you. So eventually, in the future, if we need certain companies we are not familiar with, maybe you can also share with us from review. Yeah, as we learn, as we grow, we can form a small community that are free of charge, and we can still share valuable ideas inside. Okay, so that's the concept of Investment Diary. So go and Telegram and join this group. Okay, next. Yep, so what's next? After FA, right, like I mentioned, the 4 essential investment strategies: fundamental, technical, then you have your portfolio allocation and strategies. So today we covered fundamentals. I hope it has been valuable to all of you. Yeah, so both me and Zhi Pei, we put in quite a bit of effort for the past few days. It's very impromptu, but I see that I think we need to do this now because many people has been asking, and I want to answer you all as quickly as possible. So moving on, you can do your own analysis. All right. So the next thing I will organize is probably drawing some technicals. The date is not confirmed yet, but November, I can foresee that I won't have time for November. So it will be sometime in December. Okay. But I can promise you all it will be within this year. All right. So if you are interested, join the Telegram group. I will update the info inside. All right. Next. So, okay, if you have any more questions, you can ask in the chat room. And yeah, as I move on the chat, I will be answering the questions together with Zhi Pei later. What's next? Okay, so there's one more special gift for you. So which is on the next slide. So previously I have come up with this life goals blueprint. So when you are investing, right, you need to have a strong why you are investing. You need to know what is the time frame you want to achieve your goal. So let's say for Zhi Pei's example, he wants to be a millionaire. He wants to earn his first 1 million. But earning first 1 million, you need to have a time frame, you know. For example, Zhi Pei is for 5 years. If you want to earn 1 million in 5 years, compared to 50 years, is very different. And once you earn 1 million, right, money is eventually not your end goal. What are you going to do with your 1 million? So this life goals blueprint that I put out, right, which is also thanks to one of my mentor, Sean from 5 Figure Club. So with his information, I am able to put out this blueprint for you all. So it actually meant to guide you through with a lot of questions asked and different sections for you to go through to find your life purpose, find what are the goals that you want in your life. Okay, so if you want the blueprint, it's free. It's uploaded in my personal webpage, joeharmonica.com/blueprint, and Zhi Pei has put it in the chat room. All right, thanks, Zhi Pei. Next on. Okay, so this is just a quick summary on what we covered today. So we started off with value mindset. Invest on the business, not the stock price. Price is what you pay, but value is what you get. Shortlisting company. Zhi Pei cover how to shortlist a company. You can look around you. What are the companies that you are familiar with first? If not, you can also use a stock screener, let's say for Finvix. So you can screen based on many different criteria that you want to. Okay. Third on, how should you read your company financials? So mainly on balance sheet, income sheet, cash flow statement. And Zhi Pei has also summarized 7 major things that you should look at and 4 extra points. if you want to look at the company financials. And also, please do your company financials together with the economic mode and know the business first. Okay. And we also cover case studies on Apple, and we covered what next for you to do, DCA, all the apps, and Telegram groups. All right. So what's next? I think that's all right. Okay. Thank you everyone for that session. Stay motivated, be inspired. I think I have a question from Jeremy K. Okay, what's your take on ETFs? All right, so ETFs, exchange traded fund, right? Exchange traded fund, for those who don't know, is basically a fund which can be comprised of different stuff. So we have gold ETF, which covers mainly on gold commodity and a small portion in cash. And we also have index ETF, for example, SPY. SPY is an ETF that tracks the movement of S&P 500. And we have QQQ, which track NASDAQ index. TQQQ, which is a leverage tracking of NASDAQ index. So it's a triple leverage. So NASDAQ, if it increased 3%, TQQQ will increase 9%. If it falls 10%, TQQQ falls 30%, something like that. We also have Bitcoin ETF. So GPTC, Grayscale BTC, is actually ETF used to track Bitcoin. So ETF depends on different ETF and depends on your purpose of investment. It will be very different. So for example, GPTC, like Grayscale BTC ETF, to me is good for me because Bitcoin right now is spiking already. It's already 16K. So if I want to invest in Bitcoin, if I want to buy one Bitcoin, right, I need to have 16K USD to buy one Bitcoin. But with ETF, I can eventually buy one ETF which costs me less than 50 USD, and it tracks the performance of Bitcoin. So let's say Bitcoin spike 100% in 10 years. I will see myself spiking close to 100%. Of course, it's not directly related because you need to pay a certain fees to the ETFs. So when you choose your ETFs, make sure you choose those ETF that has low expense ratio, meaning to say you don't need to pay a high percentage from what you are earning to the ETF or the one that is managing that. Yep. So ETFs will be good if you don't want to choose your own stocks. For example, if you just want to invest in the US market, but you don't want to do your FA, your TA, you can actually just put your money in SPY and you do DCA. Eventually, you can track the performance that the US market is giving. Yeah, and there are also specific ETFs to certain, I would say, sector. For example, you can check on iPay. iPay is an ETF that built on internet payment gateway or payment companies. So things they cover will be like PayPal, SQ, some other related payment gateway internet companies. So if you want to invest in a specific sector or specific market or even a specific commodities, it provides you this option. So you can just buy ETF and you, with that money, you hampalang, cover everything inside the ETF. Yep, Zhi Pei, anything to add
on? For ETF, actually you can look for ETFs in Yahoo Finance. For example, let's say ARKK. It's an innovation ETF. So basically from Yahoo Finance, you can take a look. You can go to their holdings, and then you can basically look at what are they investing in. Which companies are they in? So let's say ARKK, it's mainly on Tesla and Square, Roku, and yeah, basically it's a diversification of assets so that you do not just invest in one and then what if the company suddenly maybe the management changed something and it's not profitable anymore and stuff like that, then you lose everything. So one of the big key points of ETF is you may need less capital, as well as you can diversify into many companies. Yeah. So
yeah,
that's,
I
yeah.
think Zhi Pei covered the main points very clearly. So ETF, lower capital for you to buy a pool of company, which serves for you to diversify your portfolio. Yeah. For example, if you have 1,000 USD, if you invest, let's say you buy 1 shares for each, maybe you can only diversify so much. You buy Tesla, you buy Apple, you buy PayPal, then you only live with a little percentage. But with the ARKK ETF, Zhi Pei was sharing, with just 100 USD, you can invest in a pool of companies with the percentage they give you. Yeah, I hope that answers. Okay, any more questions? One more question. FA idea shares today can be applied on TA. Okay, so FA focus on the company itself. All right. So when we are doing fundamental analysis, we analyze the financial situation of the company. For ETFs, if you want to invest in ETF, right? My suggestion will be at looking at what are their top holding companies. So for example, ARKK, Tesla is the first one. Tesla takes up around 10% of their composition. So you can do your FA on Tesla and also do your FA on the other companies within ARKK, the top holding companies. Let's say Tesla, Square, Roku, Cruise, as Zhi Pei shared just now. Yeah, but ETF, you can take a look at their track record. But FA wise, it will be a, how to say, it will be a weighted average of what they are holding. Yeah. So FA idea works mainly on companies. Okay. Any more questions? Questions? Okay, no problem, Jeremy. Hope to see you in the Telegram group so we can share together more ideas. All right, Zhi Pei, anything more from you?
Not really. I think that's all.
Okay. All right. Thank you very much, people. We overrun the 2 hours benchmark again. Yeah, but I hope it has been very valuable for everyone. Hope you all learned something. If you all need to recap, right, I will send this recording soon, very soon in my Telegram group once I upload it to my personal website. Yeah, so if you have things that you don't understand, right, feel free to ask in the Telegram group also. We have a discussion room for you to discuss and ask questions. And if you missed the previous session, please go to joeharmonica.com, the link which I shared to you just now. Rewatch the lecture. You can also access the lecture notes there. So you know what you need to prepare before you invest. Then after you prepare already, now you have the knowledge to know how to analyze your company. So moving on, you can do DCA or you can attend the TA class. So you will learn what is the good entry and exit point for you. Okay, good. All right, everyone have a good holiday. Happy Deepavali and enjoy your weekend. I'm going to enjoy my 1 week holiday. All right, thanks Zhi Pei for sharing also. Thanks everyone. Goodbye.